Hello, and hey, mortgage rates were finally showing signs of stability, and then events halfway around the world, well, push them higher again. And this week, we're going to break down a proposal that could let first-time homebuyers use up to $50,000 from an IRA for a down payment. Why starter homes are actually becoming more affordable in other parts of the country, and why conflict in the Middle East is, well, affecting your mortgage payment, my mortgage payment, and if you're buying a home in Houston. Plus, today's mortgage and money tip could save you from one of the biggest mistakes that many homebuyers make. And let's get into it, shall we?
Do it. I'll jump in with insights on those key points
Thank
and
you,
we'll help
Sol.
them.
Thank you, Sol. So, talking point number one, IRA down payment proposal. Sol, say hi to our audience, please.
Hi, everyone. Let's dive right in. Using retirement funds for a home sounds bold, but we'll break down whether it's a smart strategy or just a flashy headline.
Hey, what if your retirement account could help you buy a home and buy your first home specifically? Current law already allows for first-time homebuyers to withdraw up to $10,000 from an IRA without paying the 10% early withdrawal penalty. Congress is now considering legislation that would increase that amount to $50,000. Now, that sounds exciting, but the bigger question isn't can you? It should be should you? And let us use an example. Suppose you withdraw 50,000, okay? Leave it invested. Historically, diversified investments have averaged around 8 to 10% annually over long periods. Option 2, let's go back to option 1 and make sure we were clear on that. So option 1, leave it invested. Historically, it would show generally give you an 8 to 10% return. Option 2, use that same money toward a $400,000 home. If that home appreciated 4 to 5% annually, you're earning appreciation on the entire 400,000 asset, not just the 50,000 you invested. That's called leverage. It's one of the reasons homeownership has historically been such an effective long-term wealth building tool. So,
You've nailed it. The key is that it's not a one size fits all. If leveraging that 50K boosts your overall wealth trajectory, great. But you also have to weigh your retirement timeline and risk tolerance. In other words, plan, not a pitch.
plan, not a pitch. And hey, here in Texas, lower down payments can also improve negotiating power and reduce monthly housing costs when combined with today's financing options. Would legislation like this encourage more families to buy homes? Let us know in the comments, and let's move on to today's talking point number 2 and discuss affordability.
Affordability is the hot topic. I'll be ready to jump in and highlight how different regions are playing out.
Yeah.
Let's show them where those opportunities might be hiding.
Thank you, Sol. Starter homes, not every housing market is moving in the same direction. Imagine that. One of the biggest myths today is that every home in America keeps getting more expensive. That's simply not true. And according to Realtor.com, roughly 20% below each region's median have actually become less expensive than they were in 2022 across much of the South and the West. So let's dive into this. South, 311,000 is down. The median price in the South for 311,000 down 3.5%. The West down over 7%, while the Midwest and Northeast have continued climbing. Why? Higher mortgage rates have cooled demand in some markets while inventory improved. And if you're flexible about location, there are opportunities many buyers don't realize exist, especially here in Texas. Compared to much of the country, Houston remains one of America's most affordable major metropolitan areas. So,
That's right. National headlines can be noisy, but real estate is always local. Houston buyers, this might be your moment if you've got a smart plan in place.
yeah, so if you're watching, are you watching from Houston, Dallas, Austin, or elsewhere? Tell us below. But affordability isn't just about price or home price, it's about mortgage rates, which we'll discuss after today's message from HOAshare.
Tired of home service hassles? Introducing HOAshare, your trusted partner for local services. The only HOA platform that pays you back. Earn cash back on every service, tracked in real time. Easily manage payments, all in one place. From plumbing to home cleaning and more, HOAshare connects you to trusted service providers. Connect, buy and sell, get notified, and more. HOAshare, your HOA finally worth something.
What an incredibly novel idea. Imagine your HOA actually has the ability to transform your community and create an ecosystem where everyone benefits. So, moving on to talking point number 3, why rates moved higher. Probably don't need to tell you, but you may wonder why, how, and why oil prices and what they have to do with mortgages. Well, actually, quite a bit. Tensions escalated between the U.S. and Iran and neighboring countries. Well, oil prices went up. Markets became more cautious. Investor demanded higher Treasury yields. Mortgage rates tend to follow Treasury yields, and according to Fannie Mae, the 30-year fixed average rate finished the week at 6.58, 6.74 this time last year. Still well below the peak of 2023, but noticeably different from the low that we saw in February of 5.98. Now, nobody can predict what rates are going to be next week because nobody can predict what is going to happen in Washington, D.C. But here's what buyers should remember. Trying to perfectly time mortgage rates has rarely been a winning strategy. Prepare early, improving credit, and having a plan ready to execute at contract is the best way to mitigate challenges in the process. So, yeah, would half a point drop in the rate change your buying plans? And this brings us to, if so, please drop us a note in the comment. And this brings us to this week's money tip, which I believe is relevant. So, hey, look, we're a referral business, and a referral alone is not credentials. This is truly, particularly one of my favorite topics because for a lot of reasons. But buying a home isn't just about signing papers. You're relying on professionals, lenders, agents, inspectors, title companies, insurance agents, and attorneys. One bad recommendation can be costly. And remember this, a referral is an introduction, it's not credentials. A referral is introduction, it's not credentials. Before hiring anyone, verify license, experience, reviews, disciplinary history, communication, strategy, and transparency and accountability. Mortgage professionals, you can check their NMLS at the consumer MLS link. I'll provide a link in the show notes. For Texas Realtors, you can go to the TREC, the Trek License Holder Search. We'll provide a link in today's show notes. And one additional point that brought this to my attention, federal consumer oversight has been reduced in the current administration, making personal due diligence even more important. No one cares more about protecting your financial future than you. After more than 3 decades, I've learned one thing. Questions are free, but mistakes are expensive. And you deserve a plan, not a pitch. And so for this week's Stoic quote, but life is very short and anxious for those who forget the past, neglect the present, and fear the future. Seneca. Housing markets, financial markets, even history itself remind us that reacting emotionally usually produces poor decisions. I deal with this all day, all week, all year, all month. We lead with our emotions. And the financial process is very analytical and objective. And the key to mitigating those anxious moments is preparation, perspective, patience. Those are timeless investments in oneself. So, question, Where in your financial life could patience produce a better outcome over panic? And speaking of perspective, I'm going to move on to this week's Stoic quote with our favorite co-host, ChatGPT Soul. Soul, are you ready? This is your moment. This is your segment.
I'm ready, Mac. Let's lighten it up. I don't enjoy computer jokes, not one bit. And incompetent accountants, they often lose their balance. And hey, the tree surgeon really went out on a limb.
Really, really, really. And do you want to do this one for the real estate agents, or should I?
Oh, I'll take this one.
You go.
Why are great realtors so calm? Because every problem eventually comes with closing arguments.
Thank you, Soul. Hey, thanks for tuning in today. And thanks for joining us for another episode of What's Up with Real Estate. And special thanks to our sponsors, Rate, List Reports, and HOAshare. And if today's episode helped you better understand the housing market, please subscribe. Please, 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 please subscribe, follow, and share. And if you're buying, selling, refinancers, or simply want a second opinion, connect with yours truly for a plan, not a pitch. Join us here every Saturday, 10 a.m., right here on LinkedIn, Facebook, and we're going to be posting the show on YouTube. And until then, stay informed, stay engaged, and I'll see you at closing.
Late nights, early mornings, he stays on the grind. Looking past the rate sheet for the value you'll find. Every signature means more than the doc you just sent.